Welcome back, traders. Today is Thursday, the 2nd of September. My name is Neville Hornsey, market analyst with YouTrading, and today I'll be talking about the Australian dollar versus the US dollar. Okay, so as always, going to start with the YouTrading Forex heat map, and you can see here that the US dollar is pretty weak, against all the other sort of pairs, apart from the yen and the yuan. Australian dollar is definitely the strongest, and following closely behind is the New Zealand dollar. So kind of a risk on, when the commodity pairs are sort of mainly bullish, I feel that's good for the equity markets and other risk assets. If we go to the active trader platform sentiment indicator on the left-hand side, come down to the bottom, 67% of traders on this platform are bearish to Australian dollar and 33% are bullish to US dollar. So 67% are basically short in the Aussie. If we go to the Australian dollar weekly sort of chart, you can see here that I highlighted 3 circles. So that was basically the start of a head and shoulders pattern, this sort of distribution pattern here. So we had left shoulder, and then we had a head, right shoulder, and then this neckline. Then we broke the neckline, and then we sort of came down in a bearish fashion all the way down to this sort of demand level, which was basically a measured move of the break of the sort of head and shoulder pattern. So, they could have taken it another leg lower. If there was no buyers here at this demand level, then we, could have been all the way down to 0.67 quite easily, and then, who knows. But as it is, buyers have stepped in for the Australian dollar, and sellers have stepped into the US dollar. Okay, what could have brought that on? Well, Australian data hasn't been so bad of late. We had private sector credit year on year. That's expanding, and it beat previous readings, beat forecasts. And when private sector is adding credit rather than paying down credit, that means they're more bullish to the economy. Banks obviously lending, so that's good for the economy. And yeah, we've seen a rise in the Aussie. Then we had GDP growth rate year on year. That beat the sort of consensus and the sort of expectations. And it's obviously much better than the year before. So 9.6 good GDP growth. And then today we had the balance of trade for Australia expanding. It rose to this $12 billion. And yeah, that's good for the economy because they're an export economy. Right, so if we go back to this chart, obviously we had this distribution pattern, we had the break of it, and that was the week of the 13th of June. So what would have caused that? Well, the dollar index here, you can see that on the 16th of June, we had this big bullish candle, sort of broke out of this little patch here, got all the way up to the sort of balance area here for May, and then it just carried on going higher. Obviously a bit of compression under the daily 200 EMA, then retested that 200 EMA, and then we went higher. Took out the swing high of March, and then we've basically proceeded to come down back into support. So, is this going to carry on going lower? Will it test the 200 EMA? Will it sweep the lows of this swing low? And will it ever get back down to the FOMC breakout candle? If it does get all the way back down here, that's where I think the Aussie dollar could rise back up to this level. So towards the 0.76, and if it does that, that's good 200 pips up to there. And then if we're doing that, who's not to say that we take out the stops that are above this right hand shoulder and this head. Okay, so what could make the dollar rise in the first place for the Aussie to come down? We said it's the 16th of June for that sort of week, and that was the FOMC, and they promoted maximum employment and price stability goals as always. They reiterated that maximum employment and inflation were rising to 2%, and they were on track to moderately exceed 2%. So that's good. If we go to the inflation data, you can see here, big crash because of COVID, and then inflation's been picking up, and then it's steepened. And here we've got the CPI. And that was worrisome for a lot of people, and they were calling for the Fed to taper, to raise interest rates to cool off this market. And then here we've got the PCE, which is the one that the Fed follows. So the blue line is what the Fed follow really. And you can see it's above 2%. It's quite way above 2%, and it is starting to roll over, and the CPI is actually starting to fall. They think, well, the Fed think the inflation is transitory, so they're monitoring this. Obviously, if we get to May 2022 and we're still up here, then they have to do something surely. All right, going to the next sort of chart would be the Aussie dollar here on the daily. You see we had a big capitulation of sellers, and then they've all been stopped out now. So if you were selling here, you've now been stopped out. On the daily chart, we're above the 50 EMA, and we could be going up to test the 200-day here, as we did when we broke down. So we broke down in June, went back up to test it, and then carried on. If we get above this balance area, trade through this balance area, that takes us to the 200-day EMA. So I'm thinking we get up to 0.748 to 749, maybe up to 0.75 just to hit the round figure. So inflation's doing well. Fed was supposed to be tapering. We go to the dollar index again. But obviously we swept the highs here on the Dixie and fell. That's because Jackson Hole Symposium, Fed Chair Powell was supposed to come out with some sort of talk of taper, which would be bullish the US dollar, obviously. Rate hikes to follow. Neither of those were mentioned, really. They've kicked the can into the September FOMC meeting, possibly into the November, and then some are saying maybe never. What could, scupper the whole taper sort of scenario? Well, Fed Chair Powell wants to get re-elected as Fed Chair Powell. President Biden wants to win this midterm elections, and they don't want the markets to have a taper tantrum. Whether the markets would have a taper tantrum, I don't know, but the Fed have to watch all the data. So they're watching the inflation data and they're watching the employment data. Yesterday's ADP number basically flatlines the ADP again. The year-on-year percent changes are not increasing, so that's not good for ADP. You can see that the red line, which is the NFP, tracks the ADP quite well. There's obviously some sort of variation, but generally they go together, they collapse together, they've risen together, and they've kind of rolled over together. So NFP tomorrow maybe disappoints. We've also got initial jobless claims, which this week ticked up, so 353,000 versus the previous 349,000. And then if you take the week before that, 277,000, they're sort of averaging around this sort of 350. What could happen in the future for employment is obviously we want more people to get employed. We don't want people unemployed. That's not good for the economy. But we just haven't seen the participation rate rising quick enough. NFP's done really good. So this green line here, you rising, and then you sort of see the big sort of drop for COVID. And then recently we've undone a lot of those jobs losses, but we haven't got back to pre-pandemic highs. But the participation rate here in red is just nowhere near the pre-pandemic levels. So that's what the Fed's worrying about. Obviously, not all these jobs are going to come back. Previous recessions have seen a decline in job participation. No reason to think that this recession period is going to be any different, but we're just nowhere near rising up to those levels. So there's obviously a wait and see mode now for that sort of Fed to see if we can get good jobs, and if that ADP is not doing very well, then NFP is not going to do very well, and we could be looking for disappointing data, which will then mean tapering and all this rate hike talk that was back here in June just fades away, and that's how the dollar drops. And then that's how the Aussie dollar gets back up to these levels here. Something that the government's been doing is adding money into the system. So they had the Coronavirus Aid, Relief and Economic Securities Act, also known as CARES. And then within the CARES Act, they had different ways of adding supplementary income. So it started off at $600 for people that received unemployment benefits. So if you were unemployed and you were on that initial jobless insurance sort of data I just showed you, then you started to receive $600. And then that's now been reduced to $300, so down from $600. So here we are at $300 is the current additional supplement for your wages or lack of wages. And that now runs out next week. So September the 6th, all of this benefits disappear. So there's going to be millions of people unemployed, as we've seen in the job participation rate. And they're also going to start losing their benefits. So, you know, $300 per week doesn't sound a lot, but if you go to a calculator and you type in 300 times 52, that's $15,600. And if you just Google average household low pay income USA, you know, $2,806 in 2019. You know, it's around that $16,000 mark now, surely. So if you're receiving $15,600 per annum in employment benefits, you know, why would you get a low paid job? You know, you're going to have to get a low paid job now because you're not going to get these payments. So, you know, we're hoping that NFP actually rises and then this participation rate also does. Otherwise, there's going to be a lot of people unemployed and struggling and unable to sort of meet their monthly payments. And that's going to be bearish for the US economy overall. So I can't see them letting that happen. But, you know, the sort of near-term action is probably going to be, you know, a drop in the US dollar and a move into, you know, high yielding Aussies. So this is how I see the Aussie dollar moving higher. Technically, we found demand. We've broken out of this sort of descending channel. On a daily, we're sort of stair-stepping higher. You know, if you go down to a 1 hour chart, you can see that we break out of resistance, come back down, test support in the moving averages, break out, retest, break out. And, you know, that's how you sort of stair-step higher. On the daily chart, you know, we just need to get above the sort of beginning of August here, that swing high, and then we're free pretty much to go up to the 200 period moving average. So that's where I'm looking at. I'm looking for Aussie dollar to rise on the back of disappointing NFP tomorrow and good economic data coming out of Australia to continue. Obviously, that all gets scuppered by COVID. Australia is dealing with COVID like everybody else, and you know, their GDP could sort of reduce because of it. So that's when, yeah, maybe we sort of pause. When we get that type of data, you have to be aware that that could be one reason why people start selling the Aussie dollar and then moving back into the US dollar. But for now, I just think it's bullish Aussie dollar. All right, I hope that was interesting, and I'll speak to you tomorrow.